We're seeing another pretty volatile day of selling with the S&P down another 1.2%. I think at this point we're probably just about at, or maybe just, we're just there, about 10% decline in the S&P from this closing high here. So not really anything too crazy yet, but it's certainly starting to get on people's minds, I think, a little bit more. When we look at what's really kind of taking place, at least on the technicals, we've broken some major levels of support already. I highlighted in my free blog last night that we might have formed a bear flag here, and it looks like we did. And so, at this point, we've broken through the lower bound of that. I don't want to focus too much on the technicals because I don't really think they're that important at this point. You can see the next major area of resistance comes at 5,400. The biggest question for overnight will be, where does the put wall set up tomorrow? Right now it's clearly at 5,500, and that's been the key. If it shifts down to 5,400, I think the doorway lower will open up. And clearly we've seen some good resistance here at 5,550. When we look at GEXBOT, you can easily see that we're just basically trading in between the two major gamma levels here in the S&P, at least since earlier today, probably around 11:30. Once we came below 5,550, we just have been really ping-ponging back and forth between those two major levels. And that's why I say if this chart here, based on data by Options Chart IO, if we were to see this level of open interest in gamma really shift lower tomorrow of 5,400, I think it's probably likely that we're going to see the S&P 500 break 5,500 and head towards that 5,400 level. I know a lot of people were thinking that, the 55.65 area would hold as support, but you can see 55.65 in comparison to even 5,500 is much smaller. That's the level where the JP Morgan collar has that put. And it just didn't seem like it was all that significant at this point. Maybe once we get past OPEX next week, that would have been different. But I think right now, OPEX is really the most important. It is really going to be this one on the 21st. This has the most amount of gamma. And so once we get past, the 21st, we'll maybe start seeing the market again move away. But I think right now we're kind of tied to where the options market is positioned and how it's trading with all of this, with all of these flows. And right now, I think we just have to be mindful that if the gamma levels shift lower tomorrow, we're looking at the possibility that this market's going to shift lower. The other piece, obviously, is the Japanese yen. The Japanese yen continues to grind as well. And this has really also been a big contributor to what's happening. And I think really kind of gives us an understanding of what the driving force here is. Clearly the Japanese yen has been moving down, and that's an indication of the yen strengthening. Again, for the most part, the S&P 500 has been trading with the yen. I know everyone's talking about tariffs and all sorts of other stuff going on, and that's probably has a lot to do with it. What's driving this market isn't partially driven largely, I think, by flows potentially going home, leaving the U.S., going back to Japan, going back to Europe, because a lot of this turmoil really began after we had that big move up. The German bond yield exploded higher on March 5th, and it kind of corresponds with when the equity market took that next major leg down. Like here we were on March 4th, March 5th, the German bond yield really moves, and you can see the equity market really took the next leg down. Again, I'm not saying it's the primary focus, it's the primary driver, but I'm thinking it's one of the drivers, because that was clearly when we also saw a really big move in the euro. And the euro had already been strengthening some, but clearly the euro has continued to strengthen. And again, I think this largely signifies the outflows from the U.S., and this could be driven by a lot of the uncertainty that's coming out of the Trump administration and because of the tariff risks. And that shouldn't be overlooked, but I think the bigger story here is the effects that the flows are having out of the U.S. and particularly in the Japanese yen, because the Japanese yen has been strengthening. And really, when we look at the Japanese yen, we can make an argument there's a little bit of support in this region, but really, once you get below 146, I think it's a clear, drop to around 143. And then we're talking about going back to the August lows. I'm not really sure how that translates to the S&P 500, but I would think it would signify probably an S&P 500 below 5,400 if we were to see that happen. And again, we're continuing to see rates in Japan rise. The Japanese 10-year was up last night by almost 2 basis points, closing at 154. So we got to continue to watch the yen. We have to continue to watch the JGB. And again, I think we need to continue to watch these spreads because these spreads continue to show signs of contraction. And we're clearly now below this major support level at 280 or so. We tried to come back up. Maybe it was a retest. Now we're moving back down again. Tomorrow we're going to get University of Michigan, and those consumer confidence numbers may be important because a lot of this sell-off also started around that time as well. The other thing today is we are seeing, bond yields, like I said, moving a little bit lower. That's kind of contributing to the fact that you're seeing the spread between U.S. and Japanese rates moving lower. We're also seeing credit spreads moving higher again today. They're not, again, to put this into a broader, some sort of broader context, spreads, although they've been moving up, they're very low historically. I mean, you can see the move, but it's clearly nothing alarming here yet. I mean, we probably need to start getting up into this 450 to 500 range before you really start seeing some signs that maybe the equity market is coming close to a bottom. And that could be some serious pain still to the downside. So we're not really seeing those warning signs yet, or those red flashing signs that suggest the equity market sell-off is getting overdone. In fact, I still kind of think that there's a lot of things to suggest it may only really be early innings for this movement, and we could still see a big move down. Again, I largely think that a lot of where we're going to go over the next day or two is going to be dependent upon how the options market sets up. If you see that put wall roll down tomorrow to 5,400, I would expect the drop to really start moving. And then really, if you break 5,400, I think your next target is the August lows. And then from there, we can worry about it if it should continue. Anyway, please remember to subscribe to this channel, like this video, share it with your friends. I'll try to have another one of these out, hopefully late Friday or maybe Saturday. Anyway, have a great one. Bye.